In this video, we'll be going over the frequently asked questions for DSCR loans. Let's start off with what is a DSCR loan? DSCR stands for Debt Service Coverage Ratio. What that basically means is that we're covering the debt with the rental income. You divide the rent by the debt, and then you get a ratio. Why are investors drawn to the DSCR loan? Two of the main reasons why investors love the DSCR loan is because it doesn't look into any income documentation or employment history. Another reason is that some banks may cap out at a certain amount of deals, a certain amount of investment loans. With the DSCR, some lenders can go more than 10, more than 20, more than 50, just depends on which lender you go with. How is the DSCR calculated? First, you'll want to find what the market rent is for the property. If it's currently being rented, you'll have to use that rent unless you get the property vacant. Once you find out how much that rent is, the next step will be to find out what the mortgage payment will be. The mortgage is made up of principal, interest, taxes, and insurance, and then an HOA if it's in an association. So once you figure out the mortgage amount and the rent amount, you divide the rent by the mortgage, and that will give you a ratio. What is a good ratio for the DSCR loan? Now, there's many different lenders out there, and many lenders have different ratio requirements. Majority of lenders will use a 1 ratio minimum. There are a few lenders that are willing to go under a 1 ratio. The higher the ratio, the better the rate. Here's a quick example for a calculation of the ratio. Let's say the mortgage amount is $1,000 and the rental income is $1,000. You divide the rent by the mortgage amount and you'll get a 1 ratio, 1,000 divided by 1,000. Now let's say the rent was $1,250. You divide the $1,250 by the $1,000 mortgage, you have a higher ratio, a 1.25 ratio. Typically, you'll get a better rate with a 1.25 versus a 1. Higher the ratio, the better the rate. What is the time frame to close on a DSCR loan? It's typically the same time frame as closing on a conventional investment loan. However, it just depends on your scenario and what documents are needed. Every file is different. On average, I would say right around the 3 to 4 week time frame. It just depends on how fast everything moves, how quick we get the appraisal, how quick title comes back, how quick we can get all the documents that are needed by the lender from the borrower. Can you refinance using a DSCR loan? Yes, you can refinance as long as the property itself is not an owner-occupied property. So if you have multiple investments and you want to do refinances on them, as long as it's not owner-occupied, you can. There are some lenders that would refi up to 75% max LTV for a cash out. There's a few lenders, very few, that will go to an 80% LTV on a cash out. Majority of times on a rate and term, you'll be at 80% LTV. I have multiple investors right now that are doing cash out refinances on their other properties and using those funds to purchase more properties with the DSCR loan. What are prepayment penalties like on a DSCR loan? So a prepayment penalty is basically if you pay off your loan early or if you sell your home within a certain time frame, you'll pay the agreed upon prepayment penalty. If you pay 20% of the loan amount in a 12-month period, you will pay a prepayment penalty on the remaining loan amount. Or if you sell your home within the duration of the prepayment penalty, you will pay a certain agreed upon percentage on the remaining loan amount. Prepayment penalties are usually 5 years with the majority of the lenders. But the good thing about it is you can actually buy down the prepayment penalty to a 4-year, a 3-year, a 2-year, 1 year, or no prepayment penalty at all. Depending on the lender, the cost will differ. And the prepayment penalty is structured in different ways. There's a 5-year flat prepayment penalty, for example, where every year you'll pay 5% prepayment penalty if you either pay off your loan or the 20% or sell your house within the duration. Or there can be a 5-year step down prepayment penalty. Basically, the first year, you'll have to pay 5%. The second year will be 4, 3, 2, 1. Again, you could buy these prepayment penalties down if you think you're going to refinance within 2 years, 3 years, 4 years. Majority of times, you probably won't refinance in the first year, but you never know. It just depends on your situation. And that's why it's important to talk to a loan originator about all of this stuff up front and what your goals are, and they can help advise you on what you can do. Okay, so we have a lot more frequently asked questions coming up. I just want to let you guys know to comment and let me know if everything was clear so far. like if you thought it was valuable. If you had any questions on anything, just comment and let me know. Make sure you hit subscribe and hit that notification bell so you don't miss out on any of the videos I'll be making. What are down payment requirements for the DSCR loan? So for single families, there are some lenders that will allow you to go down to as low as 15% down. However, when you use 15% down, the rates are usually a bit higher. The higher the down payment, usually the better the rate as well. For a 2-unit to 4-unit, you're looking at 20% minimum with the majority of lenders. With a 5-unit plus, you're looking at around 25% down. And depending on your credit score, some lenders will allow you to put less of a down payment. For example, for the 15% down, some of the lenders I work with, if you're under a 720, you won't be able to put 15% down. You'll probably have to put 20% down. For down payment, it just depends on what type of investor you are. For me personally, I always say try to keep as much cash on you. If the numbers work, choose the lowest down payment possible so you can have enough cash for the next investment. What to do if your DSCR ratio comes in a little too low? There are multiple things you could do. You could either put a bigger down payment or you could buy down the rate. You could shop around on homeowners insurance. If for some reason your homeowners came up really high, shop it around, try to get down lower. You can increase the rent that the tenant is currently paying. Keep in mind that the lender will either choose the rent that the appraiser comes up with or your rental income on the lease agreement. They'll choose the lower of the two. What are the pros and cons of using a DSCR loan versus a traditional conventional mortgage? One great pro for the DSCR loan is that they don't look into any income documentation or any employment history. Another pro is that you're not capped to own a certain amount of properties or hold a certain amount of mortgages. For example, I know with conventional, I believe you can't hold more than 10 at a time. You'll definitely need to double check on that. But with the DSCR loan, there are some lenders that allow you to purchase over 20, some lenders allow you to purchase over 50. Just depends on the lender you go with. The downsides of using a DSCR loan versus the conventional route is that there are prepayment penalties on a DSCR loan. However, you can buy down this prepayment penalty. With the DSCR loan, there are some lenders that won't lend in really rural areas. It will have to be a really good reason and you'll have to present it to other lenders for it to work. The other downside really depends on the deal itself and the scenario, is that you may have a higher rate going with a DSCR loan. It's not true in every case. There's been some deals that have gotten better rates than a conventional. It just depends on the market we're in and the deal itself. If you would like to apply for the DSCR loan or have questions on it, feel free to reach out to me as well. The link is in the description below. And those are the frequently asked questions for the DSCR loans. I'll be making a lot more videos, but for this one, make sure you like if you thought it was valuable, comment and let me know what your thoughts are, subscribe and hit that notification bell so you don't miss out on any other video. Thank you.